Bitcoin has dropped 70% since its highs last year. It's cratered to $20,000 and below that, actually touching $17,000 a coin. This is a level not seen since the end of 2020. What's next? Well, perhaps a relief rally later this summer. That's according to our next guest, Florian Grummes, Managing Director of Midas Touch Consulting. He is an expert on all things Bitcoin and gold and has analyzed the markets correctly over the last couple of years. Florian, welcome back to the show. You've been on the show for many years now. I remember speaking to you back in 2020. You had said that gold would go to $9,000 at some point, not right away, but we'll revisit that call. And you have said last year in 2021 that Bitcoin would be the best performing asset that year. You were correct. And we spoke in person in Dubai in late November, I believe, late October last year. And you had said that the reverse would happen this year. You had called for Bitcoin to start underperforming this year. And once again, so far, 7 months into the year, you have been so far correct. So let's talk about what's next for the Bitcoin price. A relief rally is something that you're anticipating in your most recent report. Tell us about that.
Yeah, first of all, thanks for having me, David. It's good to be back on Kitco. Last week I published a piece titled Relief Rally in the Summer for Bitcoin, and we're up already about $3,000 since then. The main key takeaway was basically that I thought sentiment was beaten down so much that we would see some form of a relief rally, and it looks like this is happening right now. Together with the stock market, which is also recovering a little bit, at least, or dead cat bouncing from this harsh sell-off over the last few months. And we might see a few more weeks of rather bullish price action. I think the sentiment is just so negative at the moment that there is a good chance that nearly everything will recover a little bit over the next few weeks. However, in the larger context, I think we are in a crypto winter when it comes to Bitcoin and co. Mm-hmm. And usually those crypto winters take some time. We probably will have to wait until the next Bitcoin halving, which is supposed to be happening in May 2024. So that will be nearly 2 years from now. So I think realistically, it will take at least another 6 to 12 months before this market is really ready for a big new bull market. And this is the best case scenario. I wouldn't be surprised even to see new lows in Bitcoin later that year. But for the next few weeks, I think we are in a recovery mode. And Bitcoin always surprises to the downside as well as to the upside. And it could easily rally to 25, 30K, maybe even 35K. And then we have to see what the stock market is doing, since they both are so correlated now.
Yeah, you know what's interesting is Ethereum has rallied over the last month. I'm just looking at the price action over the last month. It's up 33%. I don't think Bitcoin was up as much. People are talking about Ethereum rallying ahead of the merge. That could be one reason. Yes. Are Bitcoin and Ethereum moving independently now?
No, but Ethereum on the upside always outperforms Bitcoin. So it's a little bit similar like gold and silver, the relationship. And Ethereum has been stronger, and it's likely to gain some more momentum over the next few weeks. However, I'm actually more afraid of what's looming for Bitcoin when it comes to the Mt. Gox rehabilitation plan. So there's more than 137,000 Bitcoin soon to be expected to hit the market because the Mt. Gox is set to release these funds, and creditors have been waiting for that for the last 7 years. I don't think that people will hodl and continue to just hold those Bitcoins. I think they will be happy to sell. So that could create new price pressure later in probably late summer, early autumn. And that will probably create also pressure on Ethereum again.
Okay, so just a bit of background. So Mt. Gox was one of the world's largest exchanges back then, Tokyo-based exchange. I think $460 million was hacked back in 2013, 2014. How is this story relevant today? Can you give us some color here?
Well, I mean, back then it was the largest exchange, and at the top at $1,200, the exchange got hacked and then basically had to shut down, and the investors lost access to their Bitcoins. And it took now 7 years to come up with another plan. They managed to recover some of those Bitcoins. And so this will basically be handed out to these investors from 2013 and 14. And it's very likely that many of them will sell, given the fact that back then the Bitcoin was at the top, valued at $1,200. Now Bitcoin is trading above $22,000. Even though they get back less than 25% of their initial holding, they're still up nicely. And I think it's very likely that many of them basically will liquidate.
Okay, now is this supposed to, you said that in the context of the larger crypto winter, you're expecting a relief rally. This is, I mean, is this good news or is it bad news? I mean, for people buying at the lows, maybe a bounce is warranted. But I think in the larger scheme of the crypto winter, people might see that rally and think falsely that, okay, this is the end of the bear market. Everyone's going to start piling in, and then a lot more people are going to get hurt. I think that's
right. The sentiment is still, I mean, it's been beaten down a lot. If you look at the crypto fear and greed index, it's been down massively over the last few months, only deeply red. Sentiment is beaten down. However, people still believe that Bitcoin is likely going to 100K very soon. And I think this is not possible anymore in this current macro environment. I think a crypto winter, as I said before, you can see a massive relief rally. I mean, in the last crypto winter, I remember this was in spring 2019. Bitcoin had hit the bottom at $3,200 in December 2018. It took 3 months until it came basically back to 3,500 and then 4,000. And once it broke out above 4,000, it quickly rallied to 13,800. That was a gain of nearly 400% in 350% within just 3 months. It was a crazy rally back then, but it missed the all-time high and then it came all the way back down to 3,800 in the Corona crash, which then marked the typical double low or double bottom in a crypto winter. That's what we've seen so far in the crypto winter, is a double low, double bottom. So that would be a typical scenario. However, we have to see, and I just mentioned that this Mt. Gox rehabilitation plan is looming over the next few months. So I'm not sure how strong this relief rally will be over the next few weeks.
Well, you said potentially
end up already at 25,000, maybe 30,000. In the best case, we rally back to the 200-day moving average, which is quickly falling. It's around 35,000 at the moment.
Novograd's call for Bitcoin to go to 500K. Comment?
Yeah, in a few years, I wouldn't rule that out. I mean, let's also be clear. I mean, in the larger picture, it's all depending on when the Fed basically will pivot from its hawkish or extremely hawkish stance, right? So currently they do quantitative tightening, so they're reducing the money supply, and at the same time they're raising rates. And this is already hurting all markets. We are in a recession already. And it's just a question of time until they destroying the economy so much that we will see many people being laid off by the big companies in the third and fourth quarter, and we will see massive disruption in the banking system. And then it's all the same story again. They will come up with a rescue plan. They will start printing money again. They will lower interest rates again. And then here we are in the next wave of massive inflation. And then it can definitely be that Bitcoin goes above 100K and above 500K in a few years. Yes.
Yeah, he said specifically, so 2027 would be his target date for 500K. So 5 years from now, it'll go to 2020, it'll go to 500K. And his reasoning is that Bitcoin is becoming a more prominent financial asset. The adoption rate has continued to pick up and will continue to ramp up. Let me just throw out a counter argument to any long-term Bitcoin bulls that may agree with this view here. I mean, look, I'm not discounting the probability of this happening or the possibility of this happening. I'm just saying that, look, we already have adoption rates ramping up. The adoption of Bitcoin hasn't stopped since last year. In fact, we had another country legalize Bitcoin as legal tender, right? In Africa, the Central African Republic. So now we have 2 countries in the world that use Bitcoin as legal tender. So what I'm saying is Bitcoin's adoption hasn't deteriorated. People are still using Bitcoin for a lot of financial applications in DeFi. and yet the price has cratered. And that's primarily because the Bitcoin price has closely followed the NASDAQ this year. And all financial assets have fallen on the back of a lot of issues, right? Geopolitical issues in Ukraine, the Federal Reserve tightening, looming recession, so on and so forth. So I'm just saying maybe the unique properties of Bitcoin, which Mike Novogratz is touting for, will continue to make Bitcoin a good financial asset for a lot of things. But if other macro variables start to come in, that could still weigh down in the price, right? Bitcoin is starting to trade like a macro asset, is what I'm trying to say.
Yeah, right. It does, and that's why I think a call for 500K in a few years is not completely unrealistic, because I assume that in the macro picture, within the next, let's say, 5 to 15 months, maybe, the Fed will be back to massive money printing, and we know from the past that anytime they had to change course and print again, they have to print more than the time before. So they will have to print more than they did during the Corona crash, or as an answer to the Corona crash. So that will take us to this road of hyperinflation that we've been talking about a few times over the last few years. It's just step by step playing out. And right now, we're not there, but it could happen rather quickly once they change course. I think it will take more time. Usually the Fed is very late once they change their course. And once they do, they will be forced to do it massively. So maybe in the next 12 to 15 months, I think we're going to see a change again. And then, yeah, it's all money printing like crazy. And that could take everything much higher.
Some people are saying that the Fed will actually pivot before 12 to 15 months. They're saying that a Fed pivot will happen before the end of the year. I think Thanksgiving was the most aggressive forecast I've heard. What do you think?
They will probably stop raising rates in autumn. That's very likely. However, going back to quantitative easing will take more pain in the market and more pressure from the big companies and the banking system. And I don't think we're there yet. It can happen quickly, yes. I mean, in a bear market, everything's possible and everything can happen very quickly. I mean, look how quickly suddenly all these platforms got liquidated with Celsius and Voyager, etc., in the crypto space. Let's see. Right now, I would say it will probably take a little bit more time, because even if inflation comes down to maybe 6% over the next few months or 1-2 years, they still cannot lower interest rates if inflation is at 6%. So it will take some more time, unfortunately. So people have to understand cash is king right now, being patient, not trying to chase the markets, not trying to time the low. It's a very tricky setup at the moment, and the cash is king. This is unfortunately really the most important message that I have right now. And it's just for a few months. It's not I'm saying you should park your cash in the next for the next 2-3 years, but having a decent cash position right now and just wait until this mess is over and the storm is over, that's, I think, really important at the moment.
Well, yeah, let's talk about that storm in just a bit. Is it going to be over? Is it going to get worse? Let's come back to that. I just want to finish on Bitcoin. Help me understand something, Florian. I don't understand why Bitcoin has traded so closely with tech stocks. Naturally, the broad markets in general, but the tech sector in particular. People have been talking about Bitcoin as digital gold for quite some time. That's one of the arguments to buy Bitcoin as a store of value, hedge against inflation, so on and so forth. Gold trades independently, usually, of stock markets. Not always, but usually. It's supposed to be a diversifier. It's supposed to be a non-correlated asset to other financial instruments. And so far this year, it's done exactly that, been uncorrelated with the rest of the stock markets. Bitcoin has done the reverse. It's been very much correlated with the stock market, very much correlated with the NASDAQ in particular. I mean, why is that? There's no relationship between a tech stock and Bitcoin that I can see.
Well, I mean, technology, right? I mean, Bitcoin is also still very much a technology play, because it's a blockchain and it's a big invention for mankind, I believe. An open ledger, peer-to-peer transactions, independently of governments, central banks, and censorship. I think it's a big technological invention. But at the same time, I mean, Bitcoin and the cryptos have always been a boom and dust kind of sector. I mean, it can go up thousands of percent, but it can also retrace 60, 70, 80% easily. We've seen this a number of times already. And I think one of the main reasons, and I've been always a little bit critical of that, but I remember during the last crypto winter, many of the Bitcoin fans and Bitcoin maximalists have been calling for the institutional investors. And they've been saying they need to enter the sector, and then they actually did. And I think, I mean, there is a decent participation of institutionals over the last 2-3 years that has happened. And those people are not hodlers, blind hodlers, right? I mean, they sell, they buy, they speculate in the markets, they have different strategies. And again, I mean, everything is correlated and connected. If you have your Bitcoins in your portfolio, and you also have your stocks in there, and everything is basically selling off, maybe you're forced to raise some liquidity, and then you throw out everything. The same is actually also happening to gold, especially as an ETF position in the GLD. Mm-hmm. People quickly can sell it, and the same is true with Bitcoin. I mean, with the Bitcoin ETF, the grayscale ETF, you can quickly sell it. So I think the institutional influence in this sector has been much larger today than a few years ago. And that's one of the big reasons. And you can also make the call that I mean, in general, generally speaking, the stock market has been going up since the last financial crisis in 2008 and 2009. It's been a big rally, especially in the tech stocks. And during the same time, Bitcoin has been going up a lot, and it has outperformed everything. And in the end of the day, those 12 years has been a bull market in everything technology related.
Okay, so just to close on that thought, there's speculation that Bitcoin could one day stop being a technology play, decouple from the rest of the markets, and trade as it really should be, which is an independent asset class. Is that day is it going to come in our lifetimes? Maybe after 2140, when the last Bitcoin is mined?
Yeah, maybe. I mean, it depends. All it takes for Bitcoin to really take off is that Bitcoin is trading against, for example, commodities, right? If you buy oil in Bitcoin or trade oil in Bitcoin, if you trade natural gas or agriculture in Bitcoin, we will see a totally different setup. We are not there yet, but as you mentioned before, more and more countries adopting it. There's more and more exchanges thinking about offering those trading pairs maybe at some point. If you have to pay in real Bitcoins for oil and gas, it will change the picture completely. And this is possible in the next 10 years for sure.
Okay. Florian, let's talk about what you said earlier. Eventually the storm will pass, and you know, the Fed will revert back to its money printing ways. And there's some people that would say, hold on, the storm's not going to pass. The storm's only going to get bigger, or maybe we're going to live in a different type of storm. You yourself have said that we could potentially see a crack-up boom. By the way, your inflation calls have been very good. You have told me for a long time that we're going to get very, very high inflation. Well, you were calling for a potential, now you didn't say it will happen, but a potential hyperinflationary scenario in the West. Hasn't happened yet, but you did say inflation will get a lot higher, and it did. So congratulations on that call. What's next for inflation?
Well, I mean, given the devastating market meltdown that we're experiencing since the last 7 months, basically, inflation will come down. So it very likely will go down to maybe 5 to 6%. However, this is still high, and it will still make life more expensive for most people. And it will not allow the Fed to just easily jump back to their easy money policies. So that's why I think the storm is not over, and it could actually get more intensive over the next few months down the road. However, at some point, the Fed will stop raising rates, for sure, very likely in autumn. And then probably next year, they will have to be jump back on quantitative easing. And then it's a new chapter. And then it's again, probably pushing everything higher because there's so much money flowing into the system again. I mean, we have to talk currency that is flowing into the system.
You know what's interesting, Florian? I just want to bring up this chart to your attention. I want to ask you about this, okay? So the personal savings rate has skyrocketed to all-time highs in the U.S. I'm talking about the U.S. during COVID because nobody could spend any money. It very quickly came back down once things started to reopen. Now the personal savings rate is 5.4%. The latest observation from the St. Louis Fed. And that is the lowest level since the early 2010s, actually. It's much lower than pre-pandemic levels. all the way back to 2010, you'll find a lower level. However, I'm just looking at 1980, the late 70s and 1981. We had very high inflation back then, but the personal savings rate remained consistent around 10%. And actually, during the second recession of the 80s, during around 1982, the personal savings rate actually went up. I mean, you would assume that during a recession, people would earn less money, or people would be laid off, and so you would have to dig into your savings to survive. Or perhaps I'm pointing to the 80s in particular because not only do they have a recession, they have very high inflation. You would assume that your personal savings would be eroded away by inflation and a recession. Yeah, that's not what happened. People actually had more savings as a percentage of their disposable income. Why is that? Why is it that back then people were able to save better than we are today? I mean, the savings rate back then was in the 80s was double digits. Now we're 5%. No one's saving any money anymore.
No, I mean, people have been conditioned over the last 20 years to cash as trash and throw it away as quickly as possible and spend it on all these fancy things. And the more credit you have, the better it is. And it's been actually also very difficult because things have been getting more expensive, even though the official inflation rate maybe have not reflected that. And right now, I can just tell you that from the gold dealers that I'm talking to, they all tell me that they see a high number of people coming into their stores selling gold and silver coins because they need cash, they need liquidity. And that's also one of the reasons that gold is down. And in a recession, as I said before, cash is king. People trying and need to liquidate lots of things at the moment. And your stock portfolio is less worth today than a few months ago. Your crypto is, in the best case, less worth than a few months ago. If you were with Lunar and Celsius, you might have lost everything.
Yes.
And the same is true now for the real estate. So it is logically that it's very difficult to save money in this environment currently. And if you make it through this recession without losing anything, you're doing already extremely well. So I don't have the details exactly why in the 70s or early 80s the situation has been a little bit different, but you cannot compare the setup from back then today, because the economy has changed so much. I mean, most families have to have 2 jobs at least. The part of the income that you have to spend on living and on food and insurances is much higher than back then.
Yeah.
So I think it's hard to compare those, but it's true that since the financial crisis, most normal people have not been able to save a lot of money.
Do you think we're in a recession already?
Oh, yes, for sure.
Okay, so second quarter GDP data should be negative then.
Oh, yes, for sure. Look, the stock market is always running probably 6 months before the real economy. And the stock market has been selling off hardcore in many countries, and many tech stocks are down 60-70%.
Yeah.
It will be seen very quickly in the numbers, and I think the third and fourth quarter will bring massive layoffs.
Massive layoffs. Well, they're already starting to happen, but it's going to get worse, you saying?
Yes.
Okay. All right then. And looking ahead then, when do you think we can recover from this storm recession that we're in right now? Nobody has a crystal ball, but just putting the pieces together, do you think this will be a protracted recession, or do you think it will be over relatively quickly?
Well, I mean, there is also a certain danger that we're moving into a great recession, or a great depression, actually, that we've seen in the 1930s. That's also potentially a possibility here if the Fed is not acting fast enough at some point. I believe they will change course. They will move away from their hawkish stance, but not within the next few days or weeks. In the best case, in autumn. And in the worst case, it will take until early mid of next year until they really change course. And this also depends on how much of a trouble and problems appear in the banking system. And this can escalate quickly. So it's hard to make a call here, but I definitely think you want to be very careful at the moment. Again, cash is king. be patient, be very careful. This is not the time to play risk on. We might see a few really nice bounces in all these markets. You would have to call them a short squeeze normally. So that's when, I mean, we've seen the stock market 2 days ago suddenly shoot higher a few hours, like really a big rally in a few hours, and then it's all coming down again. It's typical bear market behavior. Be very careful here and don't try to pick the bottom here. I don't think we've seen the bottom.
You don't, yeah, okay. Well, let's finish off with your prediction like I always ask you, because you've been right every single time. What is the best performing asset this year? Or what will be the best performing asset by the end of the year? What's your prognosis for 2022?
Yeah, it's very likely the US dollar. I mean, it's been so far the best performing asset, and it probably will remain. I mean, it's very overbought at the moment. We can definitely get a pullback here, but more than a summer rally, a relief rally over the next few weeks in the stocks and Bitcoin and in gold, I don't really see at the moment. I think very likely in autumn there will be more pressure again. And maybe also to connect the dots, we did an interview in late September last year, if you remember, where we were talking about the imploding Evergrande real estate giant in China. And I said that this will have severe consequences. And I think this is also something that people don't talk enough about it. China is not there anymore to pull the West out of this mess. It used to be China after the financial crisis in 2008 and 9, when China was consuming a lot of commodities and had a lot of real estate building going on, and that basically helped the Western countries to get back out of this mess with the financial crisis. And you don't have that anymore. So that's really the troubling situation right now. There is no new player or new emerging country that will basically help the rest of the world to get back on a booming economy.
Okay. Florian, well, excellent thoughts as always. You know, I wonder why nobody can directly invest in the in food. In food prices, not just the agricultural commodities behind food. We can invest in that, but just someone should build I don't know if it's out there already. Somebody should build an index that tracks the food price, because food has been outperforming everything this year. And actually, I was looking at data from the Food and Agriculture Organization of the United Nations. In real inflation-adjusted terms, food is at an all-time high ever since the 60s.
Yeah, you're making a very good point, actually. I mean, there is no real index where you could invest in, or you can use an ETF to invest in agriculture. But there's actually one little sector that is very interesting. This is everything agri-tech. So green tech, companies that basically create food. Even though it is also a little bit questionable, the type of product that they are creating, it's very interesting. And there's a few companies that are actually doing well in this environment, and you should look probably at those.
I mean, when you think about it, if you want to hedge against inflation, just buy things or indices that track those things that go up in price. So your investment portfolio should go up. Your earning power is going to go down because of inflation, but you're hedged that way. Yeah, someone should look into that. But anyway, Florian, great thoughts.
Right.
Thank you very much for coming on, and I'll speak to you soon. I'll see you in Dubai, of course, but I'll speak to you before then.
Yes, looking forward to that already. Thank you very much for having me.
Thank you very much for being a part of our show, as always, and thank you for watching Kitco News. I'm David Lin.